Hey everyone, welcome back to my channel. So today we're going to talk about why I am not aggressively paying off any of my mortgages. Yes, that's right. Why would I choose to not aggressively pay off my mortgage if the goal is financial independence, financial freedom? You see, there's always a give and take in life, and sometimes the give and take won't make you the most money, and sometimes it will. In this case, this is an example of something that will actually make me more money to not pay it off than if I were to pay it off. For example, about 25% of people have a mortgage rate that is less than 3%. So let's just say you have $1,000 and your mortgage is 3%. If you put that $1,000 into the mortgage, you would save 3% on the because you put it towards principal. That 3% is $30 over the course of a year and about $2.50 or so over the course of a month. However, a high interest savings account right now is at 4.4%, which means that same $1,000 can make you $40 a year or about $3.67 per month, which is about $1.50 different or something like that. So essentially, in order to pay off my house or pay off the mortgage, it would cost me negative $1.50 to do so because the interest rate is so much cheaper than the interest rate that is being provided to me in just a simple savings account. I'm not talking about the stock market, which is historically doing 7 to 11% returns. I'm simply talking about a savings account with no risk whatsoever as long as you have less than $250,000 of FDIC insured funds. I am just talking about a savings account versus a mortgage in today's economy. Now, granted, there's only 25% of people who have the luxury of a mortgage under 3%, including me. But there are still people who have a mortgage less than 4%, which they would also be saving money by not paying it off and just putting it towards a savings account or even an investment vehicle. Now, here is where you would run into issues. If you had this money and you were willing to put it into a mortgage or an investment, but you did not, and instead, at month after month after month, you just spend the money instead, well, then it's not doing you any good. It's not providing a service for you. The reason for that is you're essentially just getting rid of your money and staying stagnant in the same place. So, if you're not going to use it to invest wisely, save wisely, or enhance your income, then of course it is not a benefit to you. However, if you're someone who can budget, can save, and can put in the work, then this might actually be a good strategy for you to make a little bit of extra income while interest rates are so high to where your mortgage is cheaper to keep than to actually pay off. And you see, a lot of people might still say, you know what, I don't care whether it's cheaper or not. I want the stress to be gone, and therefore I'm going to pay it off right away. More power to you. You see, this is an educational channel. So my job is to provide you with the information that you need in order to make informed decisions. An informed decision is knowing, okay, I could save money by not paying off the mortgage, but instead I still choose to do so because I understand myself. I'm not going to put that money towards an investment. I'm not going to put that money towards a savings account. Okay, if that is your habits and your tendencies and you know yourself better than I do, then it might be wiser for you to just go ahead and pay it off and go ahead and work towards paying it off. But for me, who is very vigilant and can save aggressively, I can stack that money, and then eventually when an opportunity presents itself that is even more profitable, I can go ahead and dabble into that opportunity. Because just as interest rates are high and up right now, there's going to be a time where people are getting laid off. People are not as successful in the economy because, the job market will go through its cycles. And when that happens, there's going to be less and less money in the markets. And when there's less money in the markets, they have to stimulate the economy. So interest rates will drop, prices will go down, and those who have cash will be king. You see, this might not happen for 5 years. It might not happen for 6 years, 7 years, 8 years, 10 years. But when it does, are you going to be ready? Are you going to be prepared? Are you going to be able to take advantage of these markets? You see, understanding the markets, I wasn't able to invest in 2008. I wasn't old enough nor wise enough. But now in 2020, I was able to capitalize a little bit even without knowing what I was really doing. 2021, I was able to capitalize better now knowing what I should be doing. 2022, I was ready to capitalize again, but I wasn't quick enough to get in when I was ready to get in. 2023, I was ready, but the market wasn't ready for me. And so 2024 may very well be the same thing. It's the stock market's time. Right now, everything is in the stock market. They take money out of the stock market, you put more in. You see, when housing prices are high, when housing demand is through the roof, and stocks are going down, guess what? It's time to invest in stocks. Time to invest in stocks. Time to invest in stocks. Because I'm seeing the stock market crash right now. I'm talking about day after day after day. And you know what? I'm super excited about it. I'm super excited about the opportunity to make so much more money when the market does rebound eventually. And so, why don't I pay off the mortgage? Well, it's because the interest rates are just so good. Make sure you make sure you comment, make sure you subscribe, and let me know if you want me to break down stuff like that more often. For example, I have a mortgage that is 2.625% and another one that's 2.99%. I was just giving you some rough numbers of 3% versus 4.4%, but I'm essentially saving even more without paying off the mortgage than to pay it off. And I do put a little bit extra on my mortgage still. It's not $1,000, but I still do put a little extra on the mortgage. And essentially, I'm losing money by doing that because if I was to save that money right now, I would be making a lot more money. But it's in my nature to not want that. And so I do put a tiny bit, a teeny tiny bit towards paying it off a little bit quicker because the more traction that I get, the more momentum that causes for me, the better I start to feel when the balance gets lower and lower and lower to where I'm like, oh wow, I can just pay this off with a swing. I can just pay it off with a snap of my fingers. And so I don't want to rely on having to sell a property in order to pay off a mortgage or having to sell a stock in order to pay off a mortgage. I want to be able to look into my savings account and say, ooh, I could pay that thing off right now if I want to. And so in order to do that, I just take my little chips at it. But again, it's not the most financially wise decision because I could be making a lot more just by investing or saving it right now. But I choose to do that for my tolerance level, my risk tolerance level. The little that I put into it, the little extra that I put into it lowers my risk. The less debt I have, the less risk I have. The less risk I have, the more tolerance I will have. And so this also allows you to, let's say if markets decide to plummet tomorrow, and I'm talking about the real estate market, I might still have equity, whereas someone else may not because they didn't put in a little bit of extra work. Not saying that that's good or bad. It might actually be bad to have equity because that means that you put too much money in, whereas you could have been making more money on interest from other areas at any moment. But if you're someone who doesn't want to feel as though they're underwater, you don't want that negative connotation of being underwater on a home, then yes, it would be the right move for you. Again, it's all about mindset. Whatever makes you feel the best, but also financially secure. And so, if you like this video, make sure you leave a like, comment, and subscribe. Now you know a little bit more about what I'm personally doing throughout this market in order to stay afloat, in order to stay ahead. What are you doing in order to stay afloat and stay ahead? Let me know in the comment section down below, and I'll see you in the next one. Peace.